Record first half, you have nearly 15% increase in your underlying profit, which superseded even your own company's guidance. What's your read on the first half?
Yeah, really good. And what's great and pleasing is that all parts of the business are performing well. We had a record result for Qantas Domestic, a record result from the Jetstar Group, a record result from Qantas Loyalty, and our international, Qantas International, was down slightly, but we have a huge changes to that business that are going to be implemented next year, and we're expecting a significant improvement in its performance, all things being equal, next year. So across the board, They were pretty pleasing results, and we saw today that our shareholders, our customers and our employees all benefit from those results.
International still your highest risk area, of course. You mentioned about your earnings falling around 5% this first half. How would you assess the level of competition at the moment? You've been plowing your resources into Asia. You're launching this Perth-London route pretty soon in Europe. Is the competition getting more intense or abating now?
What we are seeing it easing. There's still a lot of capacity being added generally international, but in the first half we saw a slight increase in revenue, unit revenue performance of 0.3%, and we're expecting that type of trend to continue. So unit revenue isn't getting any worse. And as I mentioned, we've got probably three big initiatives that are going to change and improve the economics. The introduction of more of the 787s in the next year. We have 8 of them in total arriving. The changes to our hub to move to Singapore from Dubai. With the removal of Emirates from some of the trans-Tasman flying that Qantas is picking up. And of course, the very new Perth to London service, which starts at the end of March, and the initial signs on that are extremely positive. So we're confident that we will see, all things being equal, a significant turnaround in the performance of the international business.
Yeah, Alan, you mentioned you have the momentum behind you. You're getting closer, perhaps the end of this 3-year turnaround program for you. Is it now time to spend? It seems like this buyback program that you announced here, you're really defying what S&P and their calls for you to upgrade your fleet. At what point do you actually see and have the appetite to reinvest again?
Well, we are reinvesting. Actually, since I've been CEO of the company, we've bought over 180 new aircraft out of a fleet of 300. And I think the S&P report was a bit flawed. Unfortunately, they reported that last week when we were in a blackout period and before they had all the information that we're showing today. And what would have made, I think, them feel a lot more comfortable, and certainly Moody's are very comfortable about it, is that our operating cash flows were a record $1.7 billion, up 50% nearly for the first half. Well, we believe, we announced today that we're taking 18 A321s for Jetstar from 2020 onwards. We've announced more investment in new lounges and more investment in recruiting of pilots. And we believe that given the performance of the company today, there's plenty of operating cash flows to fund returns to the shareholders, to return the investment in this new product and aircraft, including Project Sunrise, including the return and the retirement of the 747s, and to continue to invest in our employees with training and infrastructure. So we think, unfortunately, that report was flawed because it was a week too early to show exactly what Qantas is doing.
But they note, and just looking through that S&P report, Alan, and now that you're out of that blackout period, you can go a little bit more in detail about this. But the S&P is saying that that the average age of a Qantas airplane is just about 10 years, which is older than, let's say, at Singapore Airlines, and almost double the age of Emirates. So they're saying that the time is now to invest even more money into your aging fleet before the costs become too much to replenish that fleet.
Yes, so and I think again that was incorrect, because one of the reasons why the fleet age has gone up, and when you look at it, we've taken over 20 F100s in the last few years for the fly-in, fly-out market in Western Australia and Queensland, which our customers were demanding, people like BHP and Rio, because it allowed us to reduce the costs as the miners were suffering. And they've increased the average age of our fleet, but they're competing. They're very low cycle aircraft, and they're competing against similar aged aircraft from our competition. So there's no urgency there. Where we do have a competitive need to replace the aircraft, like retiring the 747s, we are doing it. And the oldest aircraft in our fleet are leaving this year. We're going to have 5 of the 747s retiring, being replaced by the 8 787s. And we have a plan to renew the rest of the fleet. And where the product is uncompetitive, we are actually investing very heavily in reconfiguring the aircraft. Like next year, we're spending hundreds of millions of dollars on reconfiguring the A380s to bring it up to speed with the new product on the 787s. And as I mentioned today, which S&P didn't see last week, we also announced that the Jetstar, oldest Jetstar aircraft, will be retiring from 2020. So it is happening, and it's quite a detailed expenditure on new aircraft. We've typically spent anywhere from $1.5 to $2.5 billion while I've been CEO on capital expenditure. We think we can continue to fund that and do the returns to shareholders and invest in product. We don't think there is an issue here.
Right. Then why do you? I mean, you know, not to belabor this point, Alan, but why do you think that that S&P, if you feel that they had inadequate information, then you know, why do you think they came out with this report then?
Exactly that. They had inadequate information. And if I were them, I would have waited. I think they were after headlines and getting the analysts promoted around the place. They should have waited for the results, seen what was in the results, and see where the company stands. And I think that's what Moody's have done. And I think Moody's have taken a more professional approach on this.
Alan, what will Qantas look like in the next decade or so? I mean, is it going to be more of a dominant Australian carrier, or more of a bid player here in Asia, or do you actually see global ambitions for the carrier itself and with designs on other airlines?
So one, we think there's huge opportunities in organic growth for the business. Qantas International, it's Project Sunrise, which we're making good progress with Boeing and Airbus. And that's the project to fly direct from Australia into places like London and New York. From the eastern states, and that will be a game changer, I think, for Qantas and give us huge opportunities and growth. Secondly, we are seeing continued growth in the domestic market. The resource sector is turning the corner for the first time in a few years. We've seen positive revenue growth in that sector. It's an important part of our portfolio, and if that starts to thrive, we'll have all cylinders of the Australian economy improving. And then we have our loyalty business, because we are launching financial services, insurance products, and all of those new businesses, which now amount to nearly 360 million of our profits each year, are all performing really well, and the opportunity for us to expand them is quite huge.